If you've ever thought about investing in the stock market but felt too intimidated or unsure of where to start, you're in the right place. Today, we're going to break it down step by step so it finally makes sense. By the end of this video, you'll understand what the stock market is, how it works, and why it's one of the most powerful wealth-building tools available to everyday people like you and me. The stock market feels risky, confusing, maybe even like gambling. You've probably heard stories of people losing everything, especially during crashes like in 2008. But here's the truth. While the market goes up and down in the short term, over the long run, it has always been profitable. And if you learn the basics, which is exactly what we're covering today, you'll realize the market isn't about luck. It's about education, ownership, patience, and strategy. So let's start with the basics. What even is the stock market? Think of it as the world's biggest marketplace, but instead of buying shoes or gadgets, you're buying ownership in real companies. When you buy stock in a company, you're literally buying a small piece of that company, which is called a share. Companies sell shares of stock to raise money. That money helps them expand, hire employees, build products, and reach new customers. In return, you, as a shareholder, benefit if the company grows and succeeds. That's why the stock market is so powerful. It connects two groups: companies that need money to grow and investors who want their money to grow. Let's look at an example. Back in 2010, Tesla went public at just $17 a share. Most people ignored it or even laughed at the idea of an electric car company competing with giants like Ford and Toyota. Fast forward just over a decade, and Tesla's stock skyrocketed thousands of percent. A modest $1,000 investment at its IPO would have grown into tens of thousands of dollars. And here's the crazy part. Today, Tesla is worth more than the next 35 automakers combined. Over $1 trillion. That's the kind of opportunity the stock market makes possible. Now, how do stock prices actually move? It comes down to supply and demand. If more people want to buy a stock, then the price goes up. If more people want to sell, then the price goes down. But here's the key. Behind every stock is a real business. When a company launches a new product, earns profits, or expands into new markets, its stock usually rises. When it struggles, the stock falls. So while day-to-day movements can look random, long-term performance always comes back to how well the business performs. Most beginners hesitate to invest because they're afraid of losing money. And yes, stocks go up and down. Sometimes they even crash. But history shows us something powerful. The market always recovers. Take the S&P 500, which tracks 500 of the largest U.S. companies. Over the past century, despite wars, recessions, crashes, and pandemics, it has grown an average of about 10% per year. That means if you invested $1,000 30 years ago and just left it alone, today it would be worth over $20,000. That's the magic of compounding. Your money earns returns, and then those returns start earning more returns. So, how do you get started without feeling overwhelmed? Let me simplify it into 3 steps. First, start small. You don't need thousands of dollars, even $50 or $100 a month can add up. Thanks to modern apps, you can even buy fractional shares, meaning you don't have to drop $300 just to buy 1 share of Apple. Second, think long-term. Don't obsess over daily market swings. Stocks can be down today and up tomorrow. Real wealth comes from holding for years, even decades. Third, diversify. Don't put all your money into one company. A simple way is through index funds like an S&P 500 fund, which gives you pieces of hundreds of companies in one investment. Here's the exciting part. Today, it's easier than ever to get started. Platforms like Robinhood, Webull, or Fidelity let you open an account in minutes. You can start investing with as little as $1. Check them out. I'll drop links in the description and comments below. Just a quick disclaimer here, this video is for educational purposes only, and this is not personalized financial advice. Always do your own research or talk to a professional before making investment decisions. Even if you've never bought a single share, the stock market still affects your life. Your retirement accounts, your 401k, your job security, even the economy around you, are all connected to the market. When the market grows, companies expand, hire more people, and raise wages. When it crashes, businesses cut back, unemployment rises, and life gets harder. So whether you choose to participate or not, the stock market plays a role in your financial future. Remember, the stock market isn't a casino, and it's not just for the wealthy. It's designed to give anyone the chance to grow with the biggest companies in the world. For beginners, it's your opportunity to take control of your financial future. For experienced investors, it's a reminder that fundamentals always matter. The key? Consistency. Time in the market beats timing the market every single time. I hope you found this video helpful and that you feel more confident about starting your investing journey. So hit that subscribe button and join Bull and Bear Nation, because your financial future starts today, and I'll be here to guide you every step of the way.